Good afternoon, learners. I welcome you all from Dr. D.Y. Patil Vidyapith Pune from Center for Online Learning. I welcome you all for the course OMBF 302, which is common with FinTech and International Business. That is, course name is Financial Institutions and Banking. In today's session, we are going to cover unit number 11. That is non-banking financial companies. So non-banking financial companies, as a name itself, you can find out that is going to engage in the activities of banking. Engage in the activities of banking, but that activities again that is defined under section 45(1)(a) of the RBI Act 1934. So when we are talking about these non-banking financial companies, let me tell you about that is these are the financial institutions or these are the companies which are registered under the Companies Act 1956. These are engaged in the business of loans and advances, acquisition of securities which are issued by the government or local authority. But the control that is totally by the RBI because they have to follow the RBI Act 1934. There is business of non-banking financial institution that is defined in the terms of business of financial institutions and non-banking financial institutions or corporations, we can say, or you can say the companies. When we are talking about non-banking financial companies, so can you give me some of the examples you know about non-banking financial companies in India? Have you heard about Shriram Finance, Muthoot Finance, Tata Capital, Mahindra and Mahindra Financial Services? Have you heard these names? These are some of the examples. These are some of the examples of non-banking financial companies. So if we go and check about the Shriram Finances, that is specialized in the commercial vehicle financing and medium small enterprises loans. Okay, so whenever we are talking about these particular Shriram Finance, that is going mostly that is going to provide the vehicle financing. When we are talking about the Muthoot Finance, so that is all about the gold-backed lending. Gold-backed lending. And that is a leading NBFC focused on providing loans against gold collateral. Have you heard about Manappuram Gold Loan? Yes, learners. Manappuram Gold Loan. That is also one of the non-banking financial companies. So when we are talking about these particular companies, you should understand that these particular companies are going to play a very important role in the economy, in the India's economy. Okay, we can see the definitions of different examples, but what is the actual role of these particular non-banking financial companies that is in the country's GDP? So it is going to contribute around 26%. Around 26% to the GDP. Okay, so even you can see its macroeconomic impact. Macroeconomic impact on the total credit outstanding. Okay, so you can see the growth rate that is around 13.9%. Then you can see that is going to key segments, do the key segment support. So non-banking financial companies, these are the primary financial lifeline for the missing middle. Missing middle means what? Which is going to include micro enterprises, small enterprises, medium enterprises, which alone contribute over 30% to the India's GDP. Even it is going to provide the market projection. Okay, so when we are talking about these non-banking financial companies, in future also that is expected to grow. That is expected to grow around 24 to 77 trillion by 2028. Okay, so that is what even we can see the top performing NBFCs are playing a good important role in the economy. Even there is an impact of RBI. That is, we can see the some scale-based regulation on these figures, whatever we are taking from the non-banking financial companies and all. So that is all about the non-banking financial companies. What is the functions? They are going to provide the loans, they are going to provide the loans. Even they are having an alternative lending models. I told you about different non-banking financial companies. So when we are talking about that Mahindra and Mahindra services, that is going to focus on the livelihood and vehicle financing in rural and semi-urban areas. Okay, again I repeat, Mahindra and Mahindra is going to focus on rural and semi-urban areas or the markets. They are going to provide the rural and agricultural credit as well. So now the people, the population of India or whatever the rural sector people or whatever the industries or rural and agricultural sector, that is not totally depend upon the bank or banking sector. That is totally depend upon what? That is not totally depend upon the bank, but that role has been like separated. Some of the portion that is covered by the non-banking finance companies. So now what are the functions of that particular non-banking finance companies? They are providing secured and unsecured loans. Unsecured loans without collateral they are going to provide. Even you can see the government has been promoting non-banking financial companies because that is going to replace the money lenders. Okay, and money lenders and these money lenders, Shroffs, Saukars, these are nothing but the part of our unorganized financial sector. So here, by promoting these non-banking financial companies, the government can take a good initiative. There are different non-banking financial companies. Okay, types of non-banking financial companies. So what they are going to do? They are going to focus on different sectors. Okay, they are going to focus on different sectors. They are going to focus on micro industries, medium industries, small scale industries, etc. So asset finance company, that is again a non-banking financial company. Okay, do you have any idea about asset finance companies? Any examples? In India, have you heard about Sundaram Finance, Toyota Financial Services, Cisco System Capital? They are asset financial companies. They are going to provide loans for the commercial vehicles, construction equipment, and the passenger cars. Hinduja Leyland Finance, that is going to provide the loans for the trucks, construction equipments, and tractors. Toyota, that is going to provide the loan for purchase of Toyota vehicles. Even again, here again I repeat, Toyota Financial Services. They are providing the retail financing as well as leasing options. And Cisco System Capital, that is going to focus on technology, because many businesses, they have to acquire the information technology, they have to go for networking and different technology equipment. And how these particular companies are going to work? So these companies are going to use the physical asset itself as collateral for the loan. And this often makes it easier for the companies to get approved compared to unsecured lending. So there are two most forms of common finances. Hire purchase is there, equipment leasing are there. But if you see that road constructions and all, they are going for the equipment leasing. So these asset finance companies, in short, in conclusion, they are going to provide the loans for operating heavy asset such as automobiles, excavators, generators, and that is going to account around 13.7% of total number of non-banking financial companies. Loan company. Loan company, so they are going to give the operating loan for the businesses. Because only capital is not required, but for operations of the company need many loans. We can say working capital loans that can become under the operating loan. Even when we are talking about the investment company, so if any particular company is going to invest in any particular assets, securities, etc., so even non-banking financial companies are going to provide the loan for them. So that is going to account for around 12.6%. And these are the actual figures I am telling. So even infrastructure loans. See, when we are talking about different projects, different constructions project or government's project, so if they are going to develop the infrastructure for a country, or if they are going to develop or they are going to develop for developing any particular society or anything else, so at that time, these non-banking financial companies also offer loans for the infrastructure. Okay. And around 31.5% of the total non-banking financial companies, they are engaged in the activity for providing the infrastructure loan. Even equity investment. So when we are talking about equity investment, so how the NBFCs are engaged into the equity investment? Any idea? Any idea, Tushar? Here I am talking about equity investment. So I'll tell you one thing. There are some dedicated core investment companies are available. And these dedicated core investment companies, they are going to focus on any specific sector. So that core investment companies, you can find out who's like these particular uh, companies or primary business, their primary business that is to acquire shares and the securities. So they are going to work under different categories, different frameworks, like those governed by the Reserve Bank of India, RBI. Then these core investment companies primarily hold equity in group companies. Then you can see they are going to qualify around 90% of their net assets in equity shares, etc. So these company also means non-banking financial companies not only providing loans, they are not only providing loans to the infrastructure or gold loans or any other things, but they are going to work as a core investment companies as well. Instead of taking retail deposit to fund operations, they are going to deploy the whole proprietary or I can say the raised capital to acquire shares, bonds, and debentures across various market segments. Okay, so they can go for any particular index like Nifty 50 index, Nifty Next 100 index, and all. Then again, they are going to provide the infrastructure debt fund. So, what do you mean by infrastructure debt fund? So, when we are talking about infrastructural debt fund, when they are going to work for the infrastructural debt funds, so they are going to invest that particular funds because these funds are also available. Okay. One of the learner that is asking what is the difference between investment companies and mutual fund. Mutual fund collective investment schemes. Okay, Subhashish, collective investment schemes. When we are talking about mutual fund and collective investment schemes, this is the broad term. This is the broad term. We can say that is a whole umbrella for any pooled investment vehicle where the multiple people they are going to pool their money and they are going to invest into the assets. So mutual funds and investment companies when we are talking about are simply specific types of legal structures of collective investment schemes. Okay, so both are different. Both are different. Under collective investment schemes, we are just going to pool the funds. Investment vehicle where multiple people they are going to pool their money to invest into the assets. Even if you go in detail, we can talk about the regulatory focus or accessibility. So when we are talking about the collective investment schemes, that is highly variable, region to region, that is different. Okay, so we can take an example that is agricultural or real estate schemes under the heading of collective investment schemes. Then accessibility, we can see that is they are less liquid. We can find out these are specialized or private funds. And mutual fund that is highly regulated, open-ended type of collective investment scheme where you can buy shares or units directly from the fund. Just you have to go through the demat account. You have to go for the mutual fund where you can select any particular fund that is HDFC or Quant small cap fund, anything or Axis Bank, any particular fund, Mirai asset, whatever it is. And you can buy units. You can invest monthly 2,000, 4,000 as per your requirement. Okay, and your money will be invested into the diversified portfolio. Diversified portfolio of stocks, bonds, and other securities. And these, where you can find these are highly liquid anytime within the like working days. You can bought or sold it easily. There, like you can see that is relatively low minimum investment requirement. You can start with some mutual funds you can start with rupees 100 as well. Okay, you can start with rupees 100 as well. So that is not a big deal to invest into the mutual fund. So there is a big difference between these collective investment schemes and mutual funds. Got it, Subhashish? Any doubt? So you can invest into the these particular non-banking financial companies. They are going to provide the investment in infrastructure debt funds as well, even microfinance institution. So small, medium enterprises, when we are talking about these enterprises, around 3% of the total NBFCs, they are going to invest into the microfinance institutions. Yes, they can extend loans also. Subhashish, investment companies, they can extend loan also. On investment, you can take a loan. Even if you have invested something into the mutual fund, go in your demat account, click on the loans option, you will get easily loans. If you have around portfolio of rupees around 4,30,000 or 4,50,000, easily you can get the loan of rupees 1 lakh within 5 minutes. It will be credited in your bank account. Then factor or accounts receivable. What do you mean by accounts receivable financing? Any idea? Have you heard about it? Account receivable financing. Okay. One of the learner is saying that is sundry debtors. Okay. See, accounting receivable financing, that is also known as factoring. Factoring. Okay. So what happens? That is one type of funding solution, we can say, where different businesses, they are going to use the unpaid invoices. Again, here I am talking about the unpaid invoices. Means you are right, Subhashish. We are talking about the sundry debtors as collateral to the access immediate working capital. So the lenders are going to advance between 70% to 90% of the total invoice value. So we can just bridge the gap between cash flow and wait for clients to pay the amount, wait for customers to pay our amount. Okay. And you can borrow against the value of your outstanding invoices over here. You can use them as a collateral, and your business retains ownership of the invoices, and that is going to continue to collect the payments from customers. And this is a best, this is good option for the companies that want to keep customer interaction in house and prefer borrowing limits that automatically grows as their sales volume increases. Okay, so here we are talking about that is sundry debtors. Take example, Tushar is the customer of ABC Limited. Okay, and the bill of ABC Limited that is pending with Tushar, say 5 crores rupees. Just we are taking example 5 crores rupees. Okay, but ABC Limited need the money. So what they will do? They will use that particular bill. They will keep it as a collateral to assess immediate working capital from non-banking financial companies. Okay, so that is what here when we are talking about this factor or accounts receivable. So here we are focusing on the customers. Okay, so these are the functions we can see about the non-banking financial companies. So there are different definitions are available. Even when we are going to see that is non-banking financial companies, that is hire purchase loan company, investment company, equipment company, etc. So non-banking companies, financial companies, they have to be registered with the RBI. Okay, then we have seen asset finance company, investment company, loan company. Then you can see they can deal with the mutual funds as well. They can functions as the receiving of deposit. They can lend the money. They can go for the mobilization of saving. Then they can provide easy, simple, and adequate credit. They can act as a financial supermarkets. They can channelize the funds for the productive purposes Even you can find out, they can encourage the thrift and developing saving habits between the people across over country. Okay, and features when we are talking about the financial, non-banking financial companies. So they are only going to accept the demand deposits. They cannot issue the checks. They cannot issue the checks to their customers. They cannot avail deposit insurance facility, or they cannot they cannot avail the deposit insurance facility of Deposit Insurance Credit Guarantee Corporation. Okay, and they are allowed to accept or renew public deposit for minimum period of 12 months and maximum period of 60 months. This maximum 5 years. They cannot accept deposits which are repayable on demand. Even you can see the NBFCs which are not allowed to offer interest rates which are higher than the ceiling rate which are prescribed by the RBI from time to time. Getting my point? Any doubt till now? Then we can move towards the technology and non-banking financial companies. Here, now we are talking about the fintech. Fintech. Can you tell me, Tushar, what is the role of fintech? What do you think? Now, whatever we are reshaping that modern finance, where we are going to bridge the gap which is left by the traditional banks. So, what is the role of technology? Any idea? See, when we are talking about non-banking financial companies and fintech, so nowadays we are going to reshape that modern finance by bridging gap left by the traditional banks. Now we are not using traditional banking services, right? We are updated with technology. So non-banking financial companies also provide core financial services like loans, like they are going to accept the deposit, they are going to provide different types of loans, gold loans, etc. And even they are working for the wealth management. Okay, without a full banking license. They are not known as the banks. They are non-banking financial companies. Still, the fintech utilize the software and technology to automate and streamline these non-banking financial companies' services. The key offerings, if we see the non-banking financial companies, that is loans and advances, microfinance, leasing, and hire purchase. Major examples I already gave you about Bajaj Finance, Muthoot Finance. We can add that Power Finance Corporation as well. But when we are talking about these particular non-banking financial companies, these are highly regulated financial institutions and which are necessary for replacement of these money lenders. Okay, because they are going to hold the capital reserves, they are going to underwrite the loans, they are going to offer the niche products to their customers. So they are important in providing credit to the unbanked or underbanked populations. Now, when we are talking about the financial technology or fintech, so key offerings. Have you heard about digital wallets, UPI, Stripe, robo investing, personal budgeting tools, etc.? So, fintech that is going to use tech driven platforms which are going to focus on data analytics, which are going to focus on user experience and digital delivery of financial product. So they are generally do not hold physical branches or issues loans directly from their own balance sheets. Okay, so that is all about the financial technology. Even a major example, you can see that is PayPal, Stripe, then MobiKwik. These are some of the examples of financial technology we are using nowadays, and where that is going to focus on data analytics, user experiences, even generative AI, etc. And you can see how they are going to collaborate with each other. So that is the partnership. That is the partnerships, because non-banking financial companies, they are going to possess the license, they are going to possess the capital and large customer base. And fintech companies, they are going to breach the scalable gaps, scalable technology. They are going to reduce the turnaround times and automate underwriting. So everything now in days that is automated. Okay, many fintech, they are going to choose to acquire the non-banking financial companies. Why? Because they have the license. These non-banking financial companies are going to allow them to legally lend their own funds. Again, there is a digital transformation, and in 2026 we can easily see that digital transformation. Am I right? Yes, Tushar. What is your view about digital transformation? Well, here I'm talking about the digital transformation. So you can see that non-banking financial companies, they are going to utilize the fintech softwares to assess creditworthiness in the remote areas. They are going to expand the formal credit to micro, small, and medium enterprises. That is the role. Then you can see that fintech uh, that is going to make the revolution uh, in the whatever the formal credit that non-banking financial companies are going to provide. Okay. So when we are talking about that particular fintech, so which are fintech companies? Fintech companies. Any example do you know? Companies. See, when we are talking about fintech company, you can take all the apps which we are using for share trading, Grow, Angel Broking, etc. Even you can take the example of an Paytm, PhonePe, Grow, MobiKwik, GPay, even BillDesk is there. So these companies in India transform traditional banking by automating loans. Now we all know that is on our one fingertip. Our one fingertip with the help of GPay or Paytm Paytm, we can transfer the money. We can transfer the money. Am I right? Any other doubt? Yes, Subhashish. Other learners. So it's all about latest things about non-banking financial companies. The idea in the fourth semester as a fintech specialization or finance specialization, you can do the project on non-banking financial companies. Comparative study of non-banking financial companies, where you can make the study of their process or what technology they are using, or you can go for the comparative financial statement analysis for these non-banking financial companies, where you can go for last 5 year data or historical data and you can make a project. This is a good topic. Sure. Okay. So it's all about unit number 10. If you don't have any doubt, I can give the overview about unit number. It's all about unit number 11. I can give the overview about unit number 12. Unit number 12, that is specialized financial institutions. Okay. I'm going to share the PPT for unit number 12 over here. We are not going to cover the unit, total unit, but just we have to focus that what we are going to learn into the next session. Let me share the PPT. This is your unit number 12, specialized financial institutions. So specialized financial institutions, as the name itself, you can find out, it suggests that these financial institutions are specialized. They are going to provide the loans or special financial assistance to a specific industry, or they are going to provide the loans to the development finance, or they are going to provide the loans for any particular finance for investment into the fixed assets, etc. So these specialized financial institutions, also known as the development banks or development financial institutions, they are going to receive the funds, they are going to incorporate, they are going to complete all the operations, that is primarily from the government or other public institutions. So these institutions raise funds from the capital market. Okay, so this is only overview. I'm not going into the detail. So we are going to learn into the next session why there is a need of specialized financial institutions. Then why there is, what is the importance of these particular institutions, types of specialized financial institutions and all. Yeah, do you have any idea about these types or specialized financial institutions in India? Let's talk practically. Which are the specialized financial institutions in India? IFCR. Then, do you know about NABARD, National Bank for Agriculture and Rural Development? This is the apex institution for agriculture, small scale industries, cottage and village industries sectors in rural area. Then MSMEs. Under MSMEs, like micro, small, medium enterprises, we can see that is there is a SIDB, Small Scale Industrial Development Bank of India. That is again a specialized institution. Yes, you're right, Subhash. SIDB is there. Then a National Bank for Financing Infrastructure and Development is there, which is going to support the establishment or development of long-term infrastructure financing. Then foreign trade. For foreign trade, there is an Export-Import Bank, Exim Bank. National Housing Bank for housing sector. Industrial and corporate sectors, that is IFCR, already told by Subhashish. That is India's first DFI, we can say, which is going to provide that Industrial Financial Corporation of India, which is going to provide the financial assistance to whom? Manufacturing, infrastructure and service sector. So these are some of the examples. Okay. So in next session, we are going to see that even different types of specialized institutions, state level, state industrial investment corporations, etc. So we are going to cover it in next session. Any doubt now? Other learners, other than Tushar and Subhashish. Let me check about the recording. 8 and 9. I'll check it. Any doubts? I have already shared the feedback. Back link over here. Kindly fill the feedback form. Let me take the screenshot of your attendance. Okay. So next next session, we are going to cover unit number 12 and 13. So thank you, learners, for happy learning. Thank you. See you tomorrow for taxation session. Thank you.